So the G20 meetings between finance ministers and central bank governors of 20 countries, the 20 most powerful countries, ended in Australia day before yesterday. They issued a communique soon thereafter. The communique has 4 major points that have some kind of bearing on India. One of the first points, and which has drawn a lot of attention, is the promise by G20 ministers to increase world GDP by more than 2% over the next few months. How they've arrived at this 2% number is a mystery. They have not been transparent with the details of the meeting or how they have arrived at this 2% number. They also aren't very forthcoming with information on how this 2% increase in global GDP breaks up in terms of services, in terms of trade, in terms of manufacturing, in terms of agriculture. So we will await and see what the next meeting, whether details will be available in the next meeting. And till then, we hope G20 becomes a little more transparent about its processes and a little more open about its deliberations. The other point which has direct bearing on India is the recognition by the G20 ministers this time that the qualitative easing, the unwinding of the qualitative easing program by the Fed has had some impact on emerging market currencies, and therefore they have reiterated their earlier promise that central banks across the world must coordinate their actions, and they must cooperate, must keep every other central bank informed. However, we do not see much change in the rhetoric from the 2008 meetings of G20 when they first promised to coordinate their actions. We wonder if this is just mere rhetoric or whether they will really mean something serious this time. There's another important point in this communique in which all of them have expressed some level of dissatisfaction with the progress in reform, in particular reference to IMF. It must be remembered that in 2009-2010 they had promised to broad-base the shareholding of IMF with greater representation for emerging economies. That unfortunately has not happened as yet. In fact, one of the sore points with emerging economies is when in 2010 the IMF president's seat became vacant, the developed markets resorted to getting a European president, as is the tradition. One had hoped that they would break with that tradition and provide greater representation for emerging economies, but that did not happen. Nor has the wider representation on the in the shareholding pattern of IMF. This time, though, they have taken that concern on board, and they have said that they will definitely try and do something about it and try and get USA to agree to these terms. And finally, the most important point is the agreement on taxation. The G20 ministers and central bankers have taken on board OECD paper on transfer pricing and tax shifting. Some of the ministers have said that it is not probably wise to blame the MNCs for shifting their taxes, because as long as there is misalignment between tax regimes of different countries, there will always be tax arbitrage. And so therefore the endeavor now is to harmonize taxation regulations across the globe. We'll have to wait and see how that works out.